We're looking at the 10-year today, coming off of that near 3-year high of 2.9. But investors still trying to digest those comments from Fed Chair Jerome Powell yesterday, who said it would be appropriate to move a little more quickly on tackling inflation. Echoing some of the comments that we heard in your interview, Brian, yesterday with San Francisco Fed President Mary Daly.
Session yesterday, we saw the 10-year go as high as 295 basis points, flirting really close with that 3% level. As you mentioned, we got the commentary from the Fed chief himself at that IMF conference saying that he sees the labor market as unsustainably hot, suggesting that the Fed needs to get more aggressive with its interest rate policies, which echoed exactly what the San Francisco Fed President Mary Daly told me here on site in the Bay Area, talking about how it's effectively a done deal for her to support a 50 basis point move in the Fed's next meeting that's going to be happening on May 4th. Take a listen to what she told Yahoo Finance just yesterday.
What I'm seeing is really to assure the American people that we're going to get inflation back down, that we're going to aim for our target. That is something that, in my judgment, gets us to neutral by the end of the year to get on a good path for that. Then the tactics about is it 50, is it 25, is it 75, those are things that I'll deliberate with my colleagues. But my own starting point is we don't want to go so quickly or so abruptly that we surprise Americans and make them have to adjust quickly.
And Akiko, all of the commentary that we got yesterday had some Fed shops calling for possibly 75 basis point moves. Nomura saying they could see that being the case in both June and July, although Mary Daly, in my conversation, kind of ruling out that she would support anything that high, at least for right now. She's concerned about hiking rates fast enough that could trigger a recession. So it seems a little bit early to be making that call, but just as underscored by perhaps the weather here in San Francisco, the outlook very, very, very much cloudy and uncertain in the months to come.
Yeah, I was going to say, Brian, I feel like it might be a little colder in San Francisco based on the way you're dressed today.
I got the sweater in here. It's really chilly. I thought I was coming from New York. I was like, oh, it's going to be a lot warmer here in California. No,
yeah,
not at all.
There's always that fog, a bit gloomy in San Francisco on some days. By the way, Brian, really quickly here, we heard Mary Daly there, saying that we don't want to necessarily surprise Americans move so aggressively. And yet it sounded like yesterday in that conversation that she sees this rate hike cycle moving beyond this year.
World. They're keeping close contact.
Yeah, and I think that when it comes to Mary Daly's commentary, she is seen as one of the more dovish members of the Fed, someone who historically has been not so supportive of wanting to raise rates that fast, and that's because of the labor market implications. Everyone's saying, well, yes, the unemployment rate in the labor market is looking really good right now, but you wonder at what point are the Fed rate hikes going to start to nudge the unemployment rate higher? You start to actually cause people to lose their jobs because of the higher borrowing costs, tightening the economic activity, which might incentivize businesses to downsize a little bit. But she's saying, look, that's not the point that we find ourselves in right now. The immediate issue is that 8.5% year-over-year inflation, which the Fed, to be quite honest, is behind the curve on. So that's the nexus for the Fed needing to move. The question is, how much do you need to move? How aggressively do you need to move? And that's where Wall Street banks are getting a little bit confused about the messaging here. If it's going to be 50 basis points, why not 75? Why not 100? That's going to be a conversation that maybe Jerome Powell is going to want to stamp down on in that next meeting.
Yeah, and of course, the comments yesterday, the very last ones before we hear from him in that meeting. Well,